All right, welcome into Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you very much for tuning us in here today. Let's take a look at the markets because that's really what you want to see. You don't want to listen to what I have to say. Let's take a look at the markets, starting with corn. Go to the big board behind the big head. How about that? 1 3/4 cents lower in that March contract to 674.5. Maize down a penny, 673 even. But now let's go out to the new crop, and it's. I said it last time, and I'm going to say it again. It's like you got to hit the side of your screen because you're not sure it's still working anymore. We've just been around 594 to 595 for a while, but we're a penny lower. Dees corn, the new crop's 594 1/4. How about soybeans? What's happening there? Well, we got a little bit of I can't say a rally really. We're just on the north side of unchanged. How about that? March is up a penny, 15.26 3/4. While May's up. March is now up a penny and 3/4 to 15.27 1/2. May's up a penny to 15.20 1/2. There you go. That's not a bad board, I suppose. It's getting a little bit better than it was yesterday. Let's see what the new crop's doing. Novi, as you go out the deferreds, they kind of gain a little bit more. We're up 5 1/4 cents here, and then Nov above that 13.80 line, 13.80 1/4. So gaining a little bit there, about 0.4% on the day. Let's take a look at wheat in Chicago, the Chicago wheat market. Well, what's got that market's a little lower, 3 cents lower. March is 766 1/4, while May's 3 cents lower to 777 1/4. There you go. Let's go to the Kansas City hard red wheat. That's up 4 cents in the front month. March 898 1/2. May's at 886 1/2, and that's up 3.5 cents itself. Moving over to the spring wheat in Minneapolis, let's see 5 3/4 cent gain there. There you go. 930 1/2 is the price in March. May's at 922 1/4, and that's up 5 cents itself. Finally, let's take a look at cotton. It's been lagging. Cotton was lower, and it still is by 77 points to 81.78 in March. All right, let's get our next guest analyst. It's going to be Ted Seifried, Zaner Ag Hedge in Chicago. Thanks, Ted, for being on the show. All right, a lot of numbers there. What are your thoughts?
I hear you. I hear what you're saying, Scott, with that December corn trading 595 somewhat indefinitely, right? The question is that a good thing or a bad thing? And I gotta say maybe a little bit of both, in the sense that it's a really good price, Scott. If I had $1 for every year producers wanted to see $5 plus corn, I'd have like $14, I guess. Anyways, so it's a really good price, and guys need to understand that. But at the same time, it lulls people into complacency because it's not really going anywhere, and you feel like, oh, I've got all the time in the world. Also, you say, hey, look at the front month corn at 675. I'd really like to see that December corn higher. So it's a mixed bag. But I think at the end of the day, you got to realize that 595 is a really good place to start marketing. In how many years have you been able to say that? How many years have you been able to do that? So keep that in mind and really, take a hard look at that. Aside from that, we've got kind of wishy-washy markets today. We had that sort of reversal lower in corn yesterday. Beans kind of bounced off the lows with that strength in soybean oil. And we're just kind of trying to find a direction here, Scott. Export sales didn't really do that. We had a decent number for corn, but it wasn't amazing. We had kind of a poor number for soybeans, but this is the time of year where we expect that to drop off.
Right.
And we had that daily flash sale. So, again, we're looking for direction. If we can't get going to the upside here, though, Scott, I wouldn't be surprised if we end the day heavy, which puts us in a weird, sort of precarious position for tomorrow.
All right. Great stuff. Stay right there, though. We want to hear more from you. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Ted Seifried, Zaner Ag Hedge in Chicago. We're going to be right back after this. Welcome back to Market Day Report. Let's take a look at the livestock, the meats, the proteins. That's the other side of this coin. Why don't we take a look at live cattle in Chicago first? And as you can see, they're down a little bit, not much, but we got April off 95 cents to 163.65. 15 cents off the low, so trading heavy. June's off 77 cents to 159.42. Let's move over to see what the feeders have got in line for us here. What the feeders got? They're over. They rolled over. March 80 cents lower to 186.52. Got April off 37 cents to 190.77. There you go. And then lean hogs. Lean hogs are also easier. April's off $1.12, 85.37, and we've got an 85-cent loss in the May right behind it to 94.85. Let's get back to our next guest analyst, or our guest analyst has been waiting in the wings so kindly and patiently. Ted Seifried, Zaner Ag Hedge in Chicago. Ted, anything you want to get off your chest when it comes to these livestock prices?
Look, we're down a bit today, especially on the feeder cattle side of things. I'm going to say we were kind of due for correction to cool things off a little bit. And I think overall, cattle complex, livestock complex, we're kind of paying attention to what's the conversations that are being had about the overall economy, what the Fed might do on their next meeting, the fact that inflation's coming back, giving them the green light to probably raise rates more aggressively than that quarter point that we saw last time. You and I talked about that at length before. They had the opportunity to really stay aggressive and prove a point. They didn't. So now I think they have to play catch up once again. They really seem to be just kind of following whatever the media says, because their biggest fear seems to be looking bad rather than fighting inflation. Sorry, that's my rant. But no, livestock, I think we are a bit concerned about what overall demand might be because of the rising turbulence in the stock market, concerned about where the economy might be headed and what that might mean for domestic.
Yeah, I think you're right. And the Fed has been emboldened, and you know, it's. I don't know how this ends, but right now the stock market's not listening to what the Fed's been saying. I think that's a big reckoning coming up, and you could say that for a lot of the markets. There's going to be some sort of reckoning in this year, but it's going to mean that we got lots to talk about, Ted, and that means we're going to get together a lot, and there's going to be some volatility involved. So I appreciate your comments and your content. Great stuff. Ted Seifried, Zaner Ag Hedge. Now he's in Chicago, and we're in Nashville. I got it right this time.
All right. As always, good job.